Okay, that's weird. I didn't hear it say that it was recording. Hopefully you guys can hear me okay. Can I get a few of you to type into the chat? Let me know you can hear me okay.
We can hear you.
Oh, good. Awesome. All right. So what I've done is scan through all the exam questions, and I highlighted all of the topics from each of the chapters. So chapter 6 is about non-current assets, depreciation. And so you have asset capitalization versus expense, land, tangible property, recording in accounting records, capitalization, expense, cash flows, gain or loss on sale of non-current assets, and depreciation. So the three methods of depreciation that you'd have to calculate are straight line, double declining balance, and units of activity. And you could have to do multiple years of depreciation or the second or fifth year in any particular depreciation schedule. You have to be familiar with book value, the historical cost, and accumulated depreciation, which is just the depreciation expense ongoing, recorded in a contra asset account. You also have a couple ratios that we discussed kind of in chapter 10, but they come into play at the end of each of these chapters. And so for non-current assets, you'd have return on assets and asset turnover. Any questions about the material in chapter 6 that you should be familiar with?
Can you briefly run through gain or loss on sale of non-current asset?
Sure. So okay, so I'll give you a second to read that. Guys, some of you guys are quick with answers. I'm impressed. I don't know the answer. I just made it up in my head. I have to work it out myself. All right, so what you'd have to calculate is the compensation received minus the book value. And remember, book value equals your historical cost minus the accumulated depreciation. Okay, so we have 6,000 is the value received. Book value, we have 100,000 historical cost. Accumulated depreciation equals 8 times the straight line, which is 100,000 minus 5,000 divided by 10 years. And so 9,500 per year. So you multiply the 8,000 times the 9,500. Sorry, 8. Just getting carried away with zeros. And that's 76,000. And so we have 6,000 minus 100,000 minus the 76,000. So we get 6,000 minus 24,000. So that equals an $18,000 loss. How's that example work for you, Dylan?
Great, thank you. That definitely cleared up both straight line and gain or loss.
Good. Anybody else have any questions on chapter 6? Okay, let's scroll down to number 7. We have notes in bonds payable, recording in the accounting records, borrowing, payment of principal, payment of interest, calculation of interest expense versus principal when given a single payment, current versus non-current when you're recording in the accounting records, Remember, non-current to be refinanced is, even if it's coming current, it stays non-current. Unearned revenue, recording in the accounting records of deposits received. Recording of earning records, so once you earned it, reducing your liability. Recording the balance at year end. And then you have a few analysis of debt, so current ratio, debt to equity, debt to assets. Any questions on chapter 7?
Go over a question on unearned revenue.
Sure. Spelled that wrong.
Is it supposed to be XYZ or are they two different companies?
Nope. Fingers won't pay attention. I'm going to scroll up a little bit. Okay. So we got a company sells antivirus packages for $100 a year or $210 for 3 years. 3-year option was popular, and XYZ sold 10,000 of these packages on January 1, 2020. So how was the sale recorded? Any questions on that first part? Okay. Now, the adjusting entry at year end would be unearned revenue. And so we'd have a 3-year contract. And so we have a third of it that would be recognized. So we have 2.1 million divided by 3, 700,000. And so it would decrease by 700,000. And then we would have revenue 700,000.
Unearned revenue is always a liability.
Correct.
Okay. Thank you.
You're welcome. So any questions there? All right. Okay, so now chapter 8 is on stockholders' equity. So you have to be familiar with recording the transactions in accounting records. So we have retained earnings, which has revenue, expense, and dividends. The 3 important dates for the dividends: the date of declaration becomes a liability. The record date, that's the date of the owners being recorded, and then the payment date. And then you'd have to calculate the payment for preferred and common shares. You have contributed capital, which would be common stock, preferred stock, treasury stock, and additional paid in capital. Got a question here? Hold on one second. So you have this document. You don't have to be copying it all down, so don't worry. And I'll post this one with my notes. Okay. Contributed capital, common stock, preferred stock, treasury stock, additional paid in capital, common stocks and terms, authorized, issued, outstanding, par value, non-par value, additional paid in capital, calculate the dividends. Preferred stock, you have your stated value, your stated rate, calculate your dividends. Remember that preferred stock has dividend priority. treasury stock, you have the cost in the sale. Okay. Got a question there? Gonna go over treasury stock. Sure. So what I want you to be familiar with for the exam with treasury stock is that it's the stock purchased back by the company, but not retired. So example, okay. So we'd have cash out of 1,800. And remember, treasury stock is a contra equity account. So we'd have treasury stock for 1,800. On the sale, 150 times 15. I think that's 2,250, but I'll check. Okay. So we have cash, 2,250. We'd have treasury stock, 1,800. And we'd have additional paid in capital of the difference, 450.
Professor, what is the difference between finding the dividend priority for preferred stock and calculating the dividends for retained earnings?
So There's not, so I guess I'm a little confused by your question. I'm just saying, remember, when you pay dividends, they come out of retained earnings. Calculation of the dividends would come from, when you have preferred shares, we're going to pay dividends on them. What is the dividend number that we're going to pay? Does that make sense?
Yep, got it. Thank you.
All right. Okay. All right, so chapter 9 is the cash flows. So what you want to know is the 3 sections: operating, investing, and financing. And remember, with operating section, we have 2 ways that you can do it. You can do it indirectly, and that starts with net income or net earnings. It adds back your non-cash expenses. We remove gain or loss from sale of non-current assets. That's not tested, but just an FYI so you know about it. And then we reconcile the change in operating current assets and operating current liabilities. And we use those 4 rules that I gave you. The direct, you're going to report cash received from customers, reconciled from the sales and accounts receivable, cash paid to suppliers. It shouldn't be, I guess suppliers is fine. Cash paid for supplies and cash paid for other expenses. And then remember, the treatment of interest expense is part of net income, so it's already included in the operating section in net income. And financial investment and dividends received are part of net income, so they're already part of operating income as well. Investing activities, you have, remember, they're cash purchase or sale of non-current assets, cash purchase or sale of financial investments, and then financing activities, transactions with owners, dividends paid in cash only, so not declared, sale or purchase of common stock, preferred stock, treasury stock, and then principal transactions with lien holders. So your cash payment of principal and cash received for new borrowings. We don't record interest expense in the financing activities. And then we report non-cash transactions in the notes. So if we signed a mortgage for a non-current asset like a building, that's a non-cash transaction. If we exchange stock for the acquisition of a business or assets, that would also be a non-cash transaction. Somebody asked if paying off or receiving the loan would be financing or investing, and that's financing. So those are principal, I guess I should say, debt transactions. With lien holders, so cash payment of principal, this pays down debt. Cash received for new borrowing creates new debt.
So when you open up a loan, like one of the questions on the last homework was asking about when you open up a loan, where does the is it an operating, financing, or investing? And it was kind of confusing because I thought originally that it was a financing activity, but I'm pretty sure it actually was an operating, like opening up a loan from a local bank. It like turned into like an operating.
So the only thing I can think of is that they're saying something kind of short term, and you're just kind of covering maybe checking here and there, overdraft type thing. But if you are taking money out, like getting $50,000 for a car, that's going to be a financing transaction. Now the interest and the costs are going to flow through operations. but any kind of real sum is going to be a financing transaction.
Thank you.
So one of the other faculty had slightly different approach than I do, and I thought, well, I'll at least share it with my students. I don't want to create more confusion, but I think it's kind of a complement to what I've provided, and I'm going to share that with you. I posted this in Blackboard kind of next to what I had. You can see they kind of copied more of the text into it, whereas I tried to kind of focus you on specific things that were going to be on the test. But this has more detail in terms of when you put those together, you don't have to go searching for some definitions. And I think it was worth sharing with you guys, so that's also there. The one thing that I'll point out is that we don't have anything on contingent liabilities on our exam, so you can ignore that part. And we didn't cover leases, so while you should be familiar with operating and capital lease, you don't have to worry about that, any type of operating or capital lease questions.
Will that be on the final exam since it's like a department one?
No, there are some questions I have some leeway over.
Oh, okay.
And the problem with leases is that they were supposed to have changed it, and it was supposed to go into effect at the beginning of 2019, and companies don't want to do it. And so our book's treatment of it is technically still, I guess, okay. It was supposed to go into effect now January 1, 2020. With the coronavirus issue, companies are trying to put it off again. So it's technically old information, and so that's why I didn't want to go through it, because it's just going to be confusing if you go on and you're trying to figure out and talk to people about operating leases and capital leases. Essentially, operating leases allowed companies to kind of hide quite a bit of debt that they were obligated to pay. And so they used to put it in the notes to the financial statement, but FASB wanted them to bring it into their balance sheet. And so it's more complicated than you need at an entry-level accounting course. But you should be aware, just this first part, operating leases is similar to rental, and capital lease is similar to ownership. And that's all you need to know there. But if you prefer to read rather than kind of look at the types of questions and be guided, then this is available to you. I wouldn't spend too much time on stock splits in terms of calculating them. So that's just another piece that's available to you.
What are your thoughts about doing the Pearson study plan?
I honestly don't know. I haven't seen it from a student perspective, but I wouldn't do anything that's kind of broad if you feel comfortable with some of the content. So the one thing that they have found about learning is the more you practice stuff, the better you get at it. The way that it's supposed to function is it's supposed to use all of your work and kind of direct you to some areas that you need help at. If it does, then I think that's great. For me, the way that I would kind of look at it is I would look down the study guide, and if anything kind of took me as a surprise, I would kind of go to that area of the chapter and I would look at it, and then I would see kind of through the notes if we had any questions. The exam questions are very similar to the questions that we do in class. And on the reading homework, the quiz type homework is going to be more involved than a specific multiple choice question. You know, they're usually going to have multiple choice questions
Yeah.
in part on it. And if you have an area that you have a question about, send me an email.
Okay. Sounds good. Thank you.
All right. That's it for today, folks. Thank you very much. If you have any other questions, please let me know.